All right, so Target stock has been struggling and it's now trading near its 52-week low. Because of that reason and because of many others, I know many investors are considering Target stock both for purchase and for sale, meaning that I know many investors are thinking about Target stock as a buying opportunity on this dip. Also, there are many investors that have owned Target stock for a long time now and are interested in selling Target stock. But whatever position you find yourself in, I'm going to share with you some information in this video that you're going to need to know before you make that decision on buying or selling Target stock. I'll share with you some great detail on the latest developments inside of the company, and then I'll share with you my proprietary discounted cash flow calculation, which values the business and creates a fair value valuation so you can see what I think the value of this stock is. Also, I'll share with you the forward price to earnings ratio so you can see historically how Target's current forward price to earnings ratio compares to its historical averages. So we'll do all that in this short video. So let's jump right into it after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Target's newly appointed CEO talked about some of the opportunities in the company, saying that across the entire assortment, we have an opportunity to further leverage our merchandising authority through our more than $31 billion owned brand portfolio, where we've spent decades building and refining our industry-leading design and sourcing capabilities. And I think that's true for all retailers, but especially for retailers like Target. And when you start to go into the premium segment, which I think Target starts there, right? When you compare Target to Walmart, you're paying higher prices when you shop at Target. So, from a consumer perspective, they view Target as the premium choice. When they go to Target, they expect to pay higher prices, but they want a better experience. They want better brands. They want a better shopping experience. They want everything to be better than if they were to go to Walmart. Otherwise, they would just go to Walmart because Walmart beats Target on price in nearly every category. And so going to Target means you're going there for a reason, and the merchants, the buyers, they need to provide that value. They need to offer customers that value. You're paying a higher price, but look what you're getting in return. So Target's new CEO is also focusing on technology, saying that it will need to play an even stronger role going forward. As we continue investing in our future growth, we'll be making key technology investments throughout our stores, supply chain, headquarters, and digital operations to power our team and our business. And I see this as a big opportunity for Target. And I got to give credit to Walmart here. In recent years, Walmart has really invested effectively in the improvement of the stores powered by technology. Walmart's ad technology business is allowing the company to generate high margin revenue through advertising with partnerships with advertising companies that allows better data tracking and better measurement of the advertisements and how it leads to spending in the products at Walmart stores. Additionally, Walmart's website and logistic and fulfillment services have improved meaningfully, especially on the cost side of the equation. The cost to serve has decreased as a percentage overall over recent years. So Walmart has done a great job in that category. Target had done a great job, but it's been a few years now. And what I mean by that is Target invested very effectively in the same day services category, where you can buy online or buy in the app and then pick up in the Target parking lot or pick up in Target stores or have Target delivered to you in the same day within an hour or two. They did a great job with that investment, but that investment is getting long in the tooth now. That was back in 2020, actually before then, but 2020 is really when those services thrived. During the pandemic, it was incredibly popular for consumers to buy online and pick up in the Target parking lot. They got to avoid that crowded in-store shopping experience while simultaneously getting their product almost as quickly as going and shopping and picking it up in the store, right? And so you got the best of both worlds. You didn't have to wait. If you were shopping on Amazon, usually it's if you're a Prime member, it's 2 days to get your item. Well, if you shop online at Target and go pick up in the store, you can have your item in as little as an hour and a half. And I used that experience, and it was incredibly effective. And Target was great in executing on that. And so, but that's been several years now. And that while that was driving Target's business in 2020 and 2021 and parts of 2022, competition has caught up. Amazon has become much, much faster, being able to deliver more and more items either next day or oftentimes on the same day. Walmart similarly has become more effective in being able to deliver items same day or next day or in a couple of days. And so the competition has improved, and Target hasn't improved by all that much in terms of new technology that's causing customers to want to go to Target's website or shop at Target stores. By the way, this document I'm reading from is Target's most recently completed earnings call transcript with Wall Street analysts. I've made this highlighted document available for my channel members. You can join my channel for less than $5 a month. There's a link in the description so you can check out all the benefits you get as a channel member. This is only one of them. There are so many benefits you get with our channel membership. And boy, do I believe it's one of the best long-term investments you can make in increasing your wealth. So let me share with you my proprietary discounted cash flow valuation for Target. And I calculated the company's fair value at $118 per share. The current market price is $92. So I see this stock as being undervalued. Of course, acknowledging that it faces many challenges that the new CEO will aim to correct. But at the current market price, I see this as an opportunity. But I will highlight that I believe Target stock at the current moment is riskier than arguably it's ever been. Maybe it was riskier around the pandemic when there was a lot more uncertainty. I will acknowledge that. But if we exclude that, once in a lifetime situation, Target stock is as risky as it's ever been. And so investors coming into it have to have a different mindset here. This isn't your usual safe investment that is typically the case when you're investing in a company like Target. It has added risks because the company's going backwards. It needs to restructure. It needs to make changes to reverse these losses. There's been a leadership change at the top. And so these are things that are not easy to fix, and it's not certain that they will be able to fix. So it's a higher risk situation now. But even considering that, looking at the valuation, I see it as an opportunity for long-term investors. So I do have this stock rated as a buy. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.